Hello, folks. This is Tony Drake with Drake and Associates with the February 2016 Educational Economic Update. We'll talk about some of the economic headlines that influenced markets in the last month and give you some insight into what they could mean for you as an investor. Please stay tuned at the end for a required disclosure statement. January was another volatile month for stocks. Investor sentiment turned negative on bad news out of China and plummeting oil prices. A first look at fourth quarter economic growth showed us that the economy hit a soft patch in the final months of 2015. GDP grew just 0.7%, which is a disappointing drop from the 2% we saw in the third quarter. Quarter 4 GDP growth will be revised 2 more times as data comes in, and it's possible that the final result will be more optimistic. However, we're not expecting a ton of improvement. Why did the economy slow down? We can attribute a lot of the drop to lower business spending and weak global demand. However, the data also shows that U.S. consumers aren't spending the extra money they save from gasoline. Does the slowdown mean the U.S. is heading for recession? Probably not. It's not great news, but the economy went into negative territory back in the first quarter of 2014 and bounced back rapidly. In other news, the Federal Reserve met in the last week of January and declined to raise interest rates again. That's not a big surprise given the challenging economic and market conditions. But some experts don't think the Fed made the right call. With so much uncertainty in markets, a rate hike could have given investors more confidence in the economy. On the other hand, inflation remains low and economic growth is modest, so the Fed might hold off on further rate increases for months. Earnings season kicked off in January, and the overall picture is one of lower earnings and lower revenues. That's not a surprise because we know that American firms are facing major challenges from a slowing global economy, a strong U.S. dollar, and weak commodity prices. But more than 2/3 of firms that have reported so far have been able to beat their earning targets, which tells us managers are doing a good job of managing expectations. On the positive side, a gauge of manufacturing activity blew away expectations and came in at the highest reading since last January. Manufacturing, a backbone of economic activity in many parts of the U.S., seemed frozen after several reports showed the factories struggle with demand. This new data is refreshing change, and we're hoping manufacturing is going to rebound this year. That's it for February Educational Economic Update. As always, if you have any questions or concerns about what we've discussed, please give our office a call. We have some upcoming Social Security classes, February 25th or March 3rd at the Muskego Public Library, and we have a Retirement Ready class on February 17th or March 3rd at our office here in Waukesha. Visit wealthwisconsin.com to learn more, and be sure to listen to the Retirement Ready radio show on AM 620 WTMJ Saturdays at 1 o'clock. Once again, this is Tony Drake with Drake & Associates, signing off for the month of February 2016. Please remember that nothing we talk about here is a recommendation. If you would like to discuss your personal financial situation, please give us a call at 414-409-7226. We'd be happy to talk to you. While we believe information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decision. Investment advisory services are provided by Drake & Associates, LLC, a state of Wisconsin registered investment advisor. Insurance products are offered through a separate company, Law Financial Advisory Group, LLC, a Wisconsin insurance agency. Clients are under no obligation to purchase any recommended insurance products.